Welcome back, everyone. Now, I make a lot of videos on dividend stocks and dividend ETFs, but I never speak about why you should really invest into dividend paying stocks or ETFs. So in this video, I'm going to be giving you 3 reasons why dividend investing is a great idea. So reason number 1 why dividend investing is such a great idea is that it is a true form of passive income. Once you set your money into the investment, you don't have to do anything to generate income. And what you see on the screen here is the prior history of the dividends that I received, and then also the dividend reinvestments that I made back. So it's a great form of passive income, and it is probably the best form and passive form of income there is. And what do I mean by the most passive form of income there is? And I simply mean that, again, once you make that initial investment into the asset that you're buying, you don't have to do anything to make money after that. So I have a list of passive income ideas that I pulled up on the Bankrate site. And just to give you an idea of the various forms of passive income here, you will find that a lot of these do take quite a bit of work to get going. So, I mean, right up at the first one, write an ebook. Of course, nobody has time for that. You're going to spend 12 hours to write an ebook and then hope you can market it to a wide audience. This really only works if you have a big following already. Sell photography online, well, that insinuates that I have any photography skills whatsoever. And again, there's going to be a lot of upfront costs to that generally, unless it's like AI art. If you're selling digital photography or even photo photography, there's going to be costs for subscription services, the cameras, and so on and so forth. Create an app. I don't know how to program. I don't know how many people do. So creating an app, that's going to be pretty difficult. And create a blog or YouTube channel. And I love making these YouTube videos, but to be honest with you, the pay from them isn't all that great. And it does take a lot of legwork. On a typical week, I probably spend around 3 or 4 hours making videos. So it's not really passive whatsoever. And you're going to find this all the way down the line with a lot of these forms of passive income. I mean, a lot of these are very difficult to do, and it requires a lot of upfront work if it's even possible that you're going to generate income at all. That's why I think a lot of people that go about getting passive income from a lot of these examples wind up giving up because it really is difficult. I know that just creating a YouTube channel alone, a large number of people don't even become monetized. And even if you do become monetized, the amount of money that you're going to make from that monetization is kind of limited initially. Now, this is completely hands-off passive income. I invest my paycheck bi-weekly into these ETFs, and then I just sit back and collect a paycheck. Now, the bad part of this is, of course, it's out of your hands, and you can probably make, especially if your passive income idea does work out, you're going to make a lot more from simple dividends. Of course, that's just the risk reward. But when it comes to sitting back, relaxing, and collecting dividends, nothing really comes close to dividend investing. Just let the companies or the asset managers make you money and just collect a paycheck either quarterly or monthly. Reason number 2 to invest in dividend paying assets is diversification. Now, this is the assets for VIG, the top 10, and VIG is the Vanguard Dividend Appreciation ETF. And this ETF is very diversified with a large number of holdings. So this ETF has 337 different companies, incredibly diversified. So even if one of your companies doesn't do so well or a few of them don't do so well, the rest will pick up the slack. And this doesn't only go for things like ETFs like VIG or SCHD. This diversification thing doesn't only hold true for ETFs, but it also holds true for individual companies as well. So for example, Pepsi, I'm sure a lot of you know about it, PepsiCo sells various drinks and also food products. And these are some of their brands on screen right here. And they're diversified very well in both, again, the drink and food categories. So even if one of their markets doesn't do so well or their products or services don't do so well, other products or services will pick up the slack just like a dividend ETF will. And you may be thinking that an individual company isn't diversified, and looking at it as an investment perspective, it isn't. Of course, an ETF is a lot more diversified, but if we are to compare something like Pepsi to one of like a brilliant passive income idea, you're going to tell me that Pepsi isn't more diversified than something like rental income. You know, you have a single house maybe. Maybe you have a fourplex and then who knows, a hurricane comes or an earthquake hits or a renter destroys some of your property or they sue you for whatever reason or a fire happens. Whatever it is, stocks are going to be a lot more diversified than some single housing unit or multifamily unit that you have on your own. Basically, all of these things aren't really diversified. They're really just singular things, and you hope they work because there's no other fallback. A big thing here, it's not included, but vending machines as well. You know, it costs upfront to stock the machines, to buy the machines, to get the location, and then you hope it works because you're really not that diversified. And then finally, the third reason why you should be a dividend investor, and that is because it reduces volatility. And basically, stocks or ETFs that pay large regular dividends will usually trade in the market with less volatility than stocks or companies that don't pay dividends. So in other words, if there are market declines, you should lose less in a market decline than owning a bunch of companies that don't pay dividends. And not only are these stocks less volatile, but honestly, their sources of income are far more reliable. So again, a lot of these companies, I just showed you Pepsi, for example, they have a huge distribution network with advertising and with locations all over the place. A large number of customers buy their products or services every single day, and they are going to continue buying their services or products every single day. Now, when you look at your regular courses or your normal forms of passive income here, you're going to find that that is probably not true. Again, why are people going to read your ebook? Why are people going to get your photography? Why are people going to use your app? A lot of these ideas sound good on paper and they're easy to make a bank rate article on, but in practice and in building, these ideas are very difficult to make actually profitable and give you a reliable form of income. So basically, those are the three reasons why I personally invest in dividend paying ETFs. Primarily, I do like the fact that it is an absolute form of passive income. I do like the diversification that comes with it all, and I do like their relatively stable prices. Let me know in the comment section below if you do agree, and if you did appreciate this content, leave this video a like to get it out there to a wider audience, and also subscribe to see future content. And I will see you all in the next video.